Okay, we're going to go ahead and get started. My name is Jennifer Young, and I'm with University Credit Union. And joining me today is Taylor Riley. He's one of our mortgage consultants. And we want to welcome you and thank you for attending. The webinar today is going to be covering first-time home buyers and what you can expect through the process of preparing and purchasing a home. Just a few housekeeping items. We want to make sure if you do have questions throughout the presentation, we'd encourage you to go ahead and type those questions in, and we'll stop periodically through the presentation and answer those questions. So anything you can think of that you have a question on, go ahead and type that in and we'll address it. To get started off, we just want to go through a couple of things again regarding first-time home buyers. University Credit Union has a full spectrum of loan programs available. We offer conventional FHA, VA. We handle both fixed rate and adjustable rate mortgages. We do have an assortment of short-term mortgages available as well, and construction and jumbo loans. And we're going to go into detail over a couple of these in the following screens.
All right, we're going to go over some things when it comes to getting ready to purchase a home, what to expect when you go through with the application, the pre-approval process, finding a home, having a formal approval being accepted by the sellers of the home, going through the appraisal and title process, and getting you all the way to closing when you receive your keys.
So there are a lot of variables that are going to affect your overall mortgage payment, and so we're going to cover some of those. Obviously, the down payment is going to make a big difference on what your total overall payment is. Down payments can be as small as 0 to anywhere, first-time home buyers typically somewhere in the range of 3 to 5%. And we'll address kind of the benefits of the down payment, the amount of the down payment. On whether you choose to purchase, sorry, I'm tongue-tied, that's awful. Whether you choose to purchase a condominium, which might have a homeowners association, that's what HOA fees stand for, homeowners association, or if you pick a single family home, obviously that's going to have an impact on your payment as well. Private mortgage insurance, that's what PMI stands for. Private mortgage insurance is going to have an effect on your payment too. Property taxes and homeowners insurance. Property taxes is pretty self-explanatory, but homeowners insurance is the coverage on the home itself, and that's up to you to choose what company you want to work with, and then just give us that information. And that's going to be a big determining factor on your payment as well. But the single biggest effect on your payment would be your credit. The higher your credit score, the better your interest rate, the better terms as far as down payments available. Credit is a big determining factor, and we're going to cover some of the comparisons to give you an idea of just how important credit is. Those are some of the variables that will affect your payment.
As Jennifer said, credit is the biggest aspect of driving what your interest rate is going to be. One of the things that it affects a lot is the mortgage insurance. You can be able to see on your screen the cost of the mortgage insurance at 3% cash down and at 5% cash down. You can be able to see how much it starts to grow as your credit score starts to decrease. It can become very, very expensive. One thing I wanted to add is that these are on conventional loan products. Once you get below a certain point with your credit score, an FHA product is much more reasonable in terms of what the cost is going to be. They have set pricing on $300,000. It'd be about $200 a month. So when you're going through with the mortgage insurance, you can be able to see, as I said, the increase that comes with it. So being able to have a positive credit score, something that's well above average in that 740, 720 range, can really save you quite a bit of money each individual month.
So there are a lot of benefits for membership in the credit union, and this is a big one. With the credit union, we get preferential pricing with the private mortgage insurance companies. And so we just used a $265,000 purchase price, just an average purchase price, 5% down with a credit score of 740 or better. This is the comparison. If you went to another institution, you would be paying approximately $125 a month. And with a credit union, you would be paying $92 a month. The reason that we show you this is so that you know, by coming and working with a credit union, the benefit is very tangible. You look at that amount, and that actually allows you to qualify for probably 15% more home overall. So those numbers really add up over time, and membership has its benefits.
Right. In addition to the down payment, your additional items that you want to contemplate are closing costs, how much those are going to cost you to be able to do the loan. Also, each home is unique in that you're purchasing. Some of them may have appliances, some may not. Also, when you're moving from a smaller condo or maybe an apartment into a home, furniture is an aspect. A lot of people have purchased a home before. You know somebody's purchased a home and you walk in and there's no furniture inside of the home. A lot of home buyers don't like that. Near future repairs. You may buy a home that is at the end of its life expectancy with the HVAC system or with the roof or the windows. So that's something that we can be able to look at on a case-by-case basis of how much cash you want to put down when you're purchasing a home, depending on the home you select. If you buy a new home, they don't have any window coverings, and those can be quite expensive for you. Also, if you're purchasing a home or a condo, depending on the yard tools that will be appropriate so that you can be able to take care of the home that you're selecting.
So we've got a couple of questions, and we're gonna stop for just a minute and answer a couple of questions. First question is, does PMI continue to go down incrementally as you put more down? Tyler, that's a really good question. Thank you. I'm going to have you answer that question.
Yeah, it does, and you can be able to see. Is it possible to go back to the other screen? So if you have the 3% and the 5%, you can be able to see what the cost difference is on those, and it does go in increments. So 3% cash down, 5% is going to be cheaper. If you put 10% cash down, the premiums go down even further. If you put 15% cash down, the premiums go down even more. So each individual case, when you put more cash down, you are going to receive a better pricing on that, so it's going to cost you less. Then Tyler asked one other question: how much do typical closing costs, or how much are the typical closing costs of a loan? It depends on the dollar amount. It's difficult to give specifics on that, and we can be able to reach out and we can talk about that. Each individual loan product that you select has different pricing associated with it, and also the amount of the loan changes the closing cost. So when people are looking for a percent, it's really difficult to be able to give that to them because the closing cost percentage is going to be much higher on a $100,000 loan compared to a $400,000 loan in terms of what the percentage is of the closing cost to the loan amount. So we can be able to talk about that on a case-by-case basis and go through the numbers so we can be able to give you a very specific number on how much your costs are going to be.
Those are really good questions, Tyler. One thing I will tell you is with a credit union, as an institution, our closing costs are typically lower just because we're relationship driven, we're not fee driven. And so even though there are still closing costs, you still have expenses, you're going to find that as an industry standard, ours are much lower than what you would find many of the other places. So those are really good questions. Thank you so much. On construction loans, we do offer construction loans. And what I want to clarify to you as first-time home buyers, a lot of times first-time home buyers will look at buying a home from some of the bigger builders in town, like Destination Homes or Ivory Homes or D.R. Horton. Those, you don't have to worry about providing construction financing for those homes. So I don't want you to be confused when I say a construction loan. If you look at buying a new home that you're going to have to get a construction loan. What I'm referring to in this presentation is if you're looking at building a custom home. So if you've found a piece of property, or in some cases inherited a piece of property and you would like to build a home on it, we offer financing for that, and it's under the construction loan type. We offer primary and second homes only. So if you're building an investment property, it's not available on a construction loan. And then we offer two different types of loans, a single closing or a two-time closing option. And we will provide up to 95% of loan to value or cost, whichever is most restrictive. So it is available. We're not going to cover a lot of detail in this just because this is a little bit more of an advanced program. But if you do have questions on it, reach out to us and let us help you through those.
Okay, so one of the questions that we get most often is, why now? Why would I want to purchase a home now? One of the benefits that we can be able to give you with now is that we can be able to answer specific questions for you on what your rate will be, how much your payment's going to be, what you can qualify for right now. Sometimes when we're thinking about the future in 6 months, a year, 2 years, it's difficult to be able to tell you exactly what your payment's going to be because we don't know where interest rates are going to be. We don't know the variables in the equation. One of the other benefits that we have right now is that we have a 100% financing program for a limited time. So what we can be able to do is that we can help our members with an internal loan that we have available and be able to help them where they do not have, or we can be able to go up to the purchase price. If you buy a home at $300,000, we can be able to put the loan amount up to $300,000. A couple details with that, we can be able to go up to $450,000, so it really doesn't restrict you on the dollar amount that you could be able to qualify for. The minimum credit score is a 680, which is the average credit score throughout the United States. So anybody that's at that average credit score or above, all borrowers need to be above the 680. We can do this on a 15 or a 30-year term, so those are both available for you. There's no mortgage insurance on this product. The rates are a little bit higher, but there's no mortgage insurance, so it usually offsets it. When we go through and we're talking to somebody about a 3% cash down or the 0% cash down, we really can be able to help them determine which option is going to be best for them. In some situations, not putting any cash down, doing the 100% financing is beneficial for them for the other things that they may need to purchase when they're buying the home.
So another reason why now, we've talked to a lot of buyers over the past couple of years and looking at first-time home buyers that are kind of preparing for homeownership. And a lot of them are worried about this market, the way that values have been going up so quickly and prices have been going up so quickly, and that overall real estate has always been a really good investment. Even with the decline in the market back in 2008 and 9, it's still been overall, it's always been a good investment. Real estate is a good, solid, reliable investment. And so we've seen some that were looking at getting in the market a year ago, worried that the prices were high and seen the big increase even over the past year. We don't really see that things are going to be tapering off and dropping off. It's not like everybody's concerned about a bubble, and I encourage you to find more information, reach out to us and talk to us. That's always a good conversation. We like to talk about that because we don't see it as being a bubble. We see it as, there might be a little bit of a calming, maybe not the big increase that we've seen over the past year, but interest rates have gone up a little bit, but they're not outrageous. They're still great. We're still in the 4 to 4.5% range. The programs that are available on the market right now, first-time home buyers, this is a great time, probably a better time than there's ever been in programs available to you. So it's just a really good time to look at your options and call us and talk to us. Look at not only your options for now, but if you've got some credit issues, we can give you some ideas of how to fix that credit and get prepared for, maybe whether it's 2 months down the line or whether it's a year down the line, we can help you prepare and get ready for that time.
All right, so finding home, to make sure that make sure that the website that you're using has different things that are available. So one of the reasons that we bring this up is that we actually have a website on our page that you can be able to go to that has a live feed to the Utah MLS. MLS are just a number that's associated with a home that's available for you, so that you can be able to look at these homes. It's updated in real time. There's auto sends for new listings, so you can be able to go on and customize your auto sends that you have. There's automated updating so that you can be able to see when things are sold, when things are under contract, and also when homes have had a price reduction that you may be looking at. You also have the ability to save the search criteria. So every time that you go in, you can be able to see the homes that you're looking for in those. This is just another way that we feel that we can be able to go above and beyond and being able to help people in the process of trying to go from not owning a home to home ownership.
There are steps when you get once you've been through the process of being pre-qualified for your loan, there are steps that are involved with making an offer on a home. And we're going to go through that process so that you understand and have a clear picture on what to anticipate. When you find a home, when you've gone through the process and you find a home that you really think is the one, and you decide that you want to make an offer on it, you're going to be offering an earnest money. An earnest money is a deposit of types. It's a deposit that you make on the property that says to the seller, you're serious, you want this home. That earnest money amount ranges between about 0.5% to 1% of whatever the purchase price is. We've seen it range anywhere from $500 up to $5,000 to $10,000. It depends on the price of the home. This earnest money that you put is actually goes towards your down payment and closing costs. So don't worry that it's just lost money. It goes towards whatever you're putting as far as the down payment. It is protected by 4 deadlines, and we're going to go into each of those in detail so that you know and you have a comfort level of what you're facing. The check or cashier's check, whatever you provide to the agent, gets deposited in the real estate brokerage. And again, it goes towards your down payment and closing costs. So no worry about that.
Okay. After that process, you'll review with your realtor and your loan officer. We'll go through the purchase price, recent comparables, market trends, and competing for offers. Also, the down payment, the loan programs that are available for you. We want to customize our conversation that we have with you when we're going through and finding what product's going to be best for you. We'll ask a series of questions such as how much cash you're planning on putting down, what your credit score is, have you owned a home in the last 3 years, have you owned a home at all? So we can be able to go through and look at what programs are available and what's going to fit your situation the best. The next thing we look at is monthly payment. How much are you going to be wanting to spend each individual month? Is that realistic with the dollar amount that you're going to need? We can be able to go through all of these and make sure that we're finding what's going to be best for you. And then we'll also talk about the closing costs. Once we find out the program that you're looking at, we'll find out how much cash you're planning on putting down. Then we can be able to go with a very, very specific dollar amount and say, this is how much your closing costs are going to be if you found a home at X amount of dollars in this program. So we can give you very, very specific numbers. I always like to know how much I'm going to be spending on a home before I go look at the home. It's hard for me to quantify how one home is worth $320,000 and the other one is worth $300,000. I like to know what's my payment options going to be different on the home so that I can be able to know what home I'm more comfortable with and what home I want to live in long term. Also, what we talked about earlier, the life expectancy on the roof or something like that, that's something that can be able to play into it in the different programs. So we can be very specific with people on what these items are so you have a really clear idea when you walk in to look at a home.
During the process of looking at homes, you may find something in a home that you like and that you want to keep. So you can ask for pretty much anything in the home. Sellers may not want to part with them, and you might get a hard no, but you might get a yes. But you are able to go ahead and ask for anything in the home, personal belongings or things that typically come with a home. Sometimes we look at things and think, do they come with the home automatically? Window coverings, you think about those, and sometimes they do and sometimes they don't. So you just need to have a really good relationship with your real estate agent and be able to have a clear communication of what things that you would like and what things you would like to be able to ask for. They may be personal items, and so they might be handled outside of the closing. If they're things that are customary to the home, appliances and things like that, sometimes those are considered customary. You just need to make sure that you communicate that clearly with your agent so that you can ask. You don't always get a yes, but you can ask for any of those any of those items.
Okay, home warranty. When you purchase a home, one of the things that you can be able to look at in the listing when you go see it with your realtor is if the home is going to offer a home warranty. A high percentage of homes will have a home warranty just built into to the home. The sellers know that that's something that they're going to be offering you. So when you're going through, there's different types of packages that are available. There's usually 3 to 4 packages, and they range from $300 to $450. They cover most systems for a year, electrical, plumbing, appliances. There's a small deductible involved with them. I know my last home that I purchased, I used it for a plethora of things, just small little things that I wasn't thinking about. So they can be able to come out. I believe the deductible is usually at $50, $60. And so you can just be able to pay that. So it's really, really easy to be able to have somebody come into the home. You know how much the cost is going to be for them to come in so that you're not purchasing a home and then you're stuck with high ticket items to be able to fix that. You can be able to renew them every year, so you can be able to pay for it afterwards if you want to. There are people that continually have these on their homes, much like an insurance policy that they pay for each individual year. But most of the sellers will just have this available for you. So when you're looking at a home, you know that it's going to be available.
So there are 4 key deadlines in the contract, And we're going to go into detail on each one of these so that you know what to anticipate. The first would be a seller disclosure deadline. It's about 3 to 5 days from when you very first make your offer. Second is the due diligence deadline, about 10 to 14 days out. Finance and appraisal deadlines, typically 21 to 30 days out, and a settlement deadline of 30 to 45 days out. Now, as I say those, you need to understand that every market is different, and from time to time, you'll be in a market that is a little bit more pushed for time. And so you might find that these deadlines are shortened. So you might have a due diligence deadline of 7 to 10 days and a finance and appraisal deadline of 10 to 14 days, something like that. So just know that this is all dependent on market. It depends on the property that you're looking at, how quickly the sellers need to get out, and how quickly you need to get in. It depends on if you look at a vacant home and they want to close as soon as possible, the deadlines might be shorter. So just know that this is adjusted due to market conditions and the specific homes that you're looking at. But we're going to go into detail on each of these.
Okay, so the first thing is the seller disclosures. Normally, 3 to 5 days after you go under contract, you're going to receive a stack of documents from the seller that are the seller disclosures. They will go through and talk about things like mold, termites, water damage, meth. Has the home been broken into? Has there been a fire? What kind of leaks have been in the pipes? These items are there so that you can be able to get in a written form from the seller what you're purchasing. You're supposed to go through and review them with your realtor. I always like to go through with the highlighter and mark the ones that I have questions on. There's going to be a lot of no's because they're really outlandish things, but there may be one of those things that are a yes. And this is your first opportunity where you can be able to cancel the file if you want to, where you can be able to get your earnest funds back. So this is just an opportunity for the seller to be able to give you the items they know about the home so that you know what you're purchasing.
Okay, before I start on the due diligence deadline, we have a question, and Jamie, this is a really good question, thank you. Are you going to be sending out a copy of the PowerPoint after the call? And yes, I should have covered that very first to let you know that we will be sending out an email with a copy of the recorded PowerPoint for you, as well as an additional benefit for you. We're sending out a coupon towards your closing costs. And so yes, thank you for asking, Jamie. I apologize we didn't cover that before. So the due diligence deadline is the next deadline, and it typically runs about 10 to 14 days. Sorry about that, we get caught up here. During this due diligence deadline, this is your time to really look at this home and see if this is the home for you. We would encourage, and typically you would do an inspection on the home. This is an expense that's your expense as the buyer. This is not something that is covered by the seller. Usually inspections range from $300 to $500. And if you wanted any other tests done, so if you were concerned that it might have been a meth home or there was radon or mold issues, you can order any of those repairs and inspections during this due diligence deadline period. If you find that there are repairs or things that need to be done on the home that you're interested in, then that's when you can request that from the sellers. You can request repairs, you can request a price adjustment, or if you simply just feel like this really is not the house for you, you've kind of had a change of heart and you've decided that this is just not for you, then this is really your second opportunity to cancel without a risk of losing any earnest money at this point. Now, Taylor had a really good comment earlier, and I feel like it was really important about inspections. What's your perspective on inspections?
Yeah, a lot of times through talking with my borrowers and family members in the past, most of the time when you go through and you have an inspection done, your inspector that you have do the inspection is an inspector from your realtor. And one of the things that I always talk about with people is that you want to make sure that you're trying to find independent items on the home. The realtor is paid when you close on a home. There could be a little bit of bias or something like that. There are dozens and hundreds of inspectors. I recommend a company, so it's not one specific inspector that you receive, but it's really, this inspection is for you, and it's for you only to make sure that you find out all the things on the home that you're looking for and that this is a sound home. It's structurally sound, what kind of issues may be there, and all homes, when they get older, there's some things with them. It's not that you want the perfect home. It's just that you want to make sure that it's a safe environment. So if you have a inspector that you can be able to find that's independent, that's working 100% for you, I feel that it would be in your best interest to do that.
Thank you. That's really good advice.
All right, financing and appraisal deadline. This is really when you get to the end. You do have to go to settlement afterwards, but this is really the most important date that you have. So the financing and appraisal deadline is typically 21 to 30 days after going into contract. Depending on the situation, it can be in a shortened amount of time. The appraisal needs to be completed by this time, so you know how much the value of the home is based on what the appraiser states the value is going to be. This will allow you to know if you need to renegotiate the price of the home, if the price is good, where it's at. The loan needs to be fully approved by the financial institution at this point. Once you reach this point and past this point, your earnest money is no longer available to come back to you. So this is the last opportunity to cancel with that. If you need to have an extension happen, which does happen on a very, it's very seldom that this takes place. However, we know when something may be coming up, or something that might be a problem, that we're not able to get insurance on time, or we're not able to get a verification of employment, or maybe you haven't received your first pay stub because you just started a new job. When we have these sorts of things, we can be able to call the realtor. We're in communication with them throughout. Our whole goal is to make sure that you have the best knowledge, and that you have a good experience in making sure that you have all the things that you need to know to be able to get to the end. So if we do have to do something like this, we can be able just to talk to your realtor, and usually all the parties involved are very good to work with, as long as we know where we're going to be at and how quickly we're going to get everything done. So this is really the last time that you're going through everything in this date before you get to settlement, before you go to closing.
Okay, and the last one is the settlement deadline. The settlement deadline is basically everything is done at this point. You've got your full approval. We've got all the inspections, all the repairs are done. And you'll do a final walkthrough about 1 to 2 days prior to signing your closing documents. Prior to signing your closing documents, about 2 to 3 days, 3 days before closing, you'll receive what's called a closing disclosure. And that closing disclosure is going to go over all of your final numbers, your interest rate, what your payment is, how much your closing costs are, what you're going to be required to come to closing with. It'll give you the credit for that earnest money deposit that you've already put down. This is really the final time when everything is going to come together and be finalized. So once you get that closing disclosure, if you have any questions, you can reach out to us. You can reach out to the title company. There are multiple different parties that can help you answer any questions you may have on that. You will be asked to schedule a close. We'll schedule a closing at the title company, and you'll go and sign your documents there. And it usually takes about 45 minutes to an hour, depending on how many questions, and all of the parties that are involved will be there. So your agent will be there with you. We will be there as the lender. You possibly could have some of the sellers people, but typically the sellers people close at a different title company or at a different time. But you will have your agent there, and the title company and us there helping you through and answering any questions. We do ask that you bring 2 forms of identification, your driver's license and another card, preferably one with a picture on it. So if you have a debit card with a picture, or Costco card or something like that, works just great. The down payment, this is when all of the funds are finalized. And so the down payment, this is when you'll bring the rest of what you're required to provide. So whether you bring it in the form of a cashier's check, or we just transfer it from your existing accounts over, you get a wire, there's different ways that you can handle that. When you sign your closing documents, typically the next business day is when it will be recorded, and you'll be officially the owner of the property, and that's when you'll receive your keys. Typically takes about 24 hours from the time that you sign. Sometimes a little bit quicker, but typically 24 hours is what you can anticipate.
Now, one thing with a lot of times with the settlement deadline, when we go through this, the government implemented a really good program in late 2015, so that we send all of your final numbers to you before you get to closing. And you have to sign them and send that back to us before we can get you to closing. So you'll know with certainty where your interest rate's going to be, what your loan amount's going to be, what your payment's going to be, how much cash you're going to be bringing to closing. So there should be no surprises at closing. Closing should all be about the excitement of purchasing a home, we have all of those numbers in place, so you can just come, sign your documents, ask any questions that you may have at that point, and then we can be able to get you into your home.
So at that point, it's congratulations. You are now a new homeowner, and we get to celebrate with you. This is something that we're excited about and we enjoy doing. And I know you all know how to find us. You found our website, but I also wanted to point out to you. So these are 6 of our 8. We have 2 new additions to our group, but we have, these are the mortgage consultants and their locations. Now, we have 16 branches, and so we're happy to meet you at any branch that's convenient for you. Don't let that hold you back. If you are up north and you want to meet with somebody, you just call us and let us know, and we'll make sure. If you're down south, we'll do everything we can to make sure it's convenient for you. You're also welcome to reach out to us. This 801-481-8840 number actually rings at each one of our desks. And so if you ever have a question, you know that if you call that 481-8840, that you're gonna get a mortgage consultant on the other end. And we would really love an opportunity to help you through and answer any questions and work with you through this process. Now we're gonna wait for just a few minutes and answer a few more questions. So if you have any questions, go ahead and type those in. So here's a good question. Do we lend outside the state of Utah? Taylor?
Because we're a credit union, we're not allowed to lend outside of the state of Utah. However, if people are looking to purchase a second home or an investment property, sometimes we can be able to talk to them about a cash out refinance so that they can be able to pull money out on their primary residence to be able to purchase a home. But unfortunately, we're not able to do loans outside of the state of Utah due to our charter.
So one of the questions is closing costs. How do we cover closing costs?
Yeah, there's a variety of ways that you could be able to have your closing costs covered, paid for, and stuff like that. So when you're going through with the closing costs and the down payment options, you can be able to pull money from or get money from a variety of ways. You can be able to save the money. You can be able to receive gifts, 401k distributions, and stuff like that. Also, the sellers can be able to pay for some of your closing costs through the negotiation process of you purchasing a home. That's where you want to have really, really clear communication with your realtor and make sure that there's a clear understanding of what you guys are trying to accomplish, and then you guys can be able to go through and negotiate that aspect. One of the other things that we can be able to look at on a case-by-case basis is if you have your down payment, but you don't have enough funds for closing and the seller's not willing to give you as much concessions as you need to so that you can be able to pay for those, we can be able to do a little bit of a higher rate to be able to pay for those closing costs. So sometimes instead of doing maybe a 4%, we're at 4.125 or even 4.25, the payment may only go up $10, $20, $30 a month, but it could pay for thousands of dollars in closing. So there's a variety of different ways that we can be able to look at each individual situation and make sure it works best for you.
It's a good question. So next question is, do you get pre-approved for a home loan before finding a home? You want to make an offer for? Tyler, that's a really good question. It's really important to get pre-approved before you go out for a couple of different reasons. It's really important to know that you're pre-approved before you see a home so that you know that you're in good faith, you're going through homes that you can really follow through with. If you find a home that you fall in love with and then come to find out you don't qualify, you would be so heartbroken. Maybe you wouldn't, maybe your spouse would be heartbroken. But it's really important, and a lot of people, actually a lot of sellers, will not show you their properties until you've been pre-approved, until they know that you've been pre-approved and would qualify for that home. Sellers are fickle and funny people, and they don't want to have everybody coming through just to see their house. They want to make sure that you're a serious buyer. And so that pre-approval letter really tells them that they're serious. But it's just really important, mostly for your peace of mind, to know that you're looking at a home that you really can afford, and that if you fall in love with, you can follow through. So our suggestion is always get pre-approved first. Make sure that we give you lots of options and that you choose what's going to work best for you, and then give you a range of what you want, where you want to be with your payment, and give you a range of price ranges so that you're not looking out of that range and get disappointed. So thank you, Tyler. That's a really good question. Do you want to take the next?
Yeah, we got a question here. Do you offer any special financing for poor credit customers with low income or struggling with a down payment? We have a variety of options that are available for you. To put all three of those in a box sometimes can be a little bit difficult, but we can be able to look on a case-by-case basis and see poor credit customers. One of the things with those types of things, if somebody has maybe a mid 500 FICO score, it's pretty easy in a short time to be able to get them above a 620, so they can be able to have pretty much every possible loan option available for them. We can be able to help individuals with the 100% financing, but if your credit score is below 680, we can also be able to look and see what grants are possibly available. There are community developments and stuff like that. Sometimes cities will have grants available, and we can be able to look and see what's out there so that we can possibly be able to help you even a little bit more with the down payment. Some of those are really, really good where everything's forgiven within a certain amount of time. So we can be able to look at everything. If you are worried about that stuff, I tell people not to. Our time is available for you. We'll go through, answer all your questions, talk to you about what you need to do, talk to you about what you can be able to do right now, and we'll make sure that you have at least a plan to be able to move forward so that you can be able to have the American dream of home ownership.
Thanks. That was a really good question. Thanks, Jamie. Another question, how soon should you be pre-approved before looking for a home? A couple months out, a year out? Justin, that's a really good question. We suggest that you come in and talk to us about 3 to 4 months before, especially with the market the way that it is. It may even be that you need to take a year if there are credit issues that need to be resolved. So it's just really important to start the process. Just because you call us to get pre-qualified doesn't mean that we're going to pull credit immediately at that time. We may go ahead and just look at maybe a FICO score or credit score that we have on file. We may just ask you and say, based on the scenario that you give us, we can go through and run numbers based on income. We work with a lot of students that are in the process of graduating and don't have their first job out of college yet. And so we're anticipating what their earnings will be. And we get them pre-qualified based on those anticipated earnings. There's a lot of things that we can do in preparation. So it really is just a very personal thing. My suggestion is if you have questions, call us, let us help you through, let us consult with you and see what works best for you. Everybody's different, but that's a really good question. Thank you, Justin.
What I recommend is something like that is if you're thinking about purchasing a home, give us a call and talk to us. We can just go through, ask you what your current income is. If it's going to be changing in the near future, we can be able to get an estimate. We'll ask you what your credit score is. We don't need to pull credit at that time. And we can give you very, very specific numbers at that time so that you can understand where you are and where you want to get to. Personally, for me, if you are looking for homes or going and walking through homes, you should be pre-qualified. It'll really save you a lot of time so that we can be able to have your pay stub, W-2, we can be able to have everything in place so that you can have an offer letter, and then we just need to get updated items. This will really help you with your flexibility so that you can be able to do a very, very quick closing. Nothing's more stressful than when you're busy at work, you found the perfect home, and you're not prepared to be able to purchase it. So you're taking time to be able to get the application done so you can be able to get the timeline that you need to. If you can be able to do that in the future, that's going to do nothing but benefit you. So if you're looking at homes online actively or driving by homes, get pre-qualified. If you have any questions, just give us a call. It'll take 10 minutes at most to really go through and tell you how much your payments are going to be and what you qualify for.
That's great advice. That's a great question. Thank you. So we're going to wait for just about another minute and see if there's any other questions.
One question that a lot of people ask is about mortgage insurance. If you put 20% cash down, you do not have to have mortgage insurance if you don't do an FHA option. Mortgage insurance can go away depending on the type of product that you have. So the mortgage insurance is something that is going to be there, but it is something that can be removed in the future. If that's something that's a concern, because I find a lot of people really hate mortgage insurance, which is understandable, but we can be able to talk to you about your options. If you currently know somebody who has a home, they're looking to remove mortgage insurance, we can look at all those options for you so that we can be able to get those questions answered.
Okay, one more question. How long do you have to live in a home before you can rent it out? It's a good question, Haley. Thank you very much. Do you want to?
Yeah, it's typically a year. There's a owner occupancy disclosure that you're going to sign at closing. The pricing on the mortgages, so your interest rate, possibly mortgage insurance, is cheaper if it's a primary residence. There's a lot less risk associated with that. So it's typically a year. If you purchase a home, it's going to be your primary residence. You move in, and then you are planning on moving out, and you can be able to rent that, but it's 1 year that you'll need to be in that home before that's something that you can legally do. There is a case-by-case situation. If you're moving for a job or something like that, they're not going to come back at you or anything like that. So just keep us informed if one of those situations are the case where you know that you're going to be moving out. But if you're looking at the building of wealth, where moving into a home and then moving into the next home, it's a year that you'll need to be in that residence.
It's a good question, Haley. Thank you. I will tell you on that, the tricky thing is if you do a high balance loan, so you move into the first home, you live in it for a year, and you rent it out after that. The next home that you move into, if that initial home, the first home, still has PMI insurance on it, you're going to be required to put more of a down payment. You can only have one home have PMI insurance on it, and that's not our rule. That's the PMI companies. They will only insure one home at a time. That means their primary residence. So they want to make sure that you don't have 2 high balance or 3 high balance loans. So it gets a little bit tricky, and those are good questions to ask. Those are a little bit more advanced and personalized. So if you do have questions on that, give us a call and we'll walk through that with you. One question that we've run into from time to time that I want to cover is the down payment options. Now, Taylor talked about this briefly, but there are a lot of different sources to use for down payment. You can use a gift. You can get a gift from a family member, or you can do, if you've got a 401k program that you've got money invested in, you can do a loan from that 401k. And in a lot of times you can get that without any penalty. And the nice thing is that we don't always have to count that payment against you. So there's some really great different sources, not only just savings. And as we mentioned earlier, we do have a program for first-time homebuyers that doesn't require any down payment. So it's really a good time. First-time homebuyers, as I've said before, it's a really great time and a really great market for first-time homebuyers. It's a good time to buy a home. So it looks like we don't have any more questions, and we feel like we've kept you long enough. If you do have questions, please reach out to us. Again, that 481-8840 rings directly at our lines, at our desks. If you have any questions, we look forward to working with you and answering those. And thanks so much for joining us today, and enjoy the rest of your day.